5 years ago, the S&P 500 closed above 2,000 for the first time, and now it has finally reached its next milestone, the long-awaited 3,000 level. So what exactly got us here? Bob Pisani is at the NYSE to break it down for us. Hey, Bob.
I wish it was a broader rally, but it's not. What a difference 5 year makes. So the S&P has moved 50% less than 5 years. It was 2,000 August 26, 2014, 3,000 today, intraday. But the market's very different than it was in 2014. Investors have played favorites in a very big way. Big tech and FANG names dominate the winners, including Amazon, Netflix, Microsoft, Facebook, Apple. These have become enormously influential. Also influential, semiconductors, dominant, big gains, NVIDIA, AMD, Broadcom, but there's an even broader trend in general. The biggest companies just keep getting bigger, and particularly the tech-themed companies, Visa and MasterCard, that's the fintech space, Cisco as well, but you get the idea, tech. There are a few outliers like United Health and Home Depots that have been big outperformers that are not tech, but there's not many of them that really have moved the charts. Most consumer names, look at this, they're right in the middle of the pack. Remember, the S&P is up 50%. So Pfizer, Walmart, J&J, Procter & Gamble, Coke is towards the bottom. It's only up 25%, you see there. Not a lot of outperformance here. There's a few exceptions. JP Morgan and Bank of America have outperformed a little bit, but most of the banks have been notable underperformers. Then there's the outright losers, and there's two big groups that have dominated from 2,000 to 3,000 on the downside. First, energy stocks. No surprise. Remember, oil was $100 5 years ago. It's $60 today, even with the rally. The other big losing sector are retailers like Macy's. So what does it mean that a handful of big cap tech stocks have come to completely dominate the stock market? To me, it means technology is where the growth is. That's the story. Growth is really hard to find around the world, so everybody pays up anything they can for growth wherever they can find it. And Melissa, I wish the rally was broader, but that's the facts. Back to you.
All right, Bob. Thank you. Bob Pisani, a disappointed Bob Pisani when it comes to the breadth of the rally. Does that disappoint you?
No, because I think we all know that, first of all, a tech company looks different than what a tech company used to look like. Amazon is a retail company, but it's a tech company. So you have to buy these 6 names that he talks about, these 4 to 6 names, or even 8 names that he discusses here. Energy has done nothing. It's zero. But doesn't mean you can't make money or lose money day to day in that space. It's very volatile.
All right, Pete?
Yeah, I agree with Steve. And when I look at Amazon, that's the one name I've missed out on. I absolutely have missed out on it. And I think it's because I've always looked at it as more retail, e-commerce. That's really not what they are. I mean, I've been fooling myself for too long. It's AWS. This is a cloud company when it really comes down to it. And because of it, yes, their tech, along with Microsoft, along with a lot of the names that I do like and I do follow and I still own those names, I still think there's upside. I think it's still too cheap in Facebook, in Apple, in some of these other names. I think there's plenty of upside because of all the verticals.